The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 29th. How about that, folks? Almost through with July. That's a terrible thing. I love summertime. But it is Marvelous Monday, and today is the opening. This is the opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call bouncing back with self-encouragement. Now, here's a familiar scenario for all of us. You know, you've got an exciting goal in mind. You've done your homework. You think you're amply prepared, and things just don't work out. You've probably had times when you thought you were doing what you were supposed to do, but really, you ended up being misinformed. You know, you thought you had it all laid out, and it just didn't work out. You burned the midnight oil. Day after day, and it didn't help. No matter what you couldn't seem, no matter what, you just simply couldn't seem to really change the end result. You know, these are really what I consider times when you have to be your own best cheerleader. And let me share with you the two best ways so that you can continue to keep being self-encouraged out here. Because number one, what we've got to do is you've got to take responsibility for that missed opportunity, or maybe it was a misinterpretation. In trading and investing, this is going to happen often. Now, that last opportunity just sets up for you to be able to take advantage of the next opportunity. What you want to do is, study your mistakes. You want to learn from them. But what you want to do most of all is you want to take advantage of the next opportunity that comes your way. Maybe that was really the gift after all. Number two, don't get down on yourself and don't beat yourself up. It's the next opportunity that matters, not the last one. The last one only matters that we must learn from it. I promise you there is a gift that comes from that last opportunity. There is a gift in everything that comes our way, good or bad. Each of us, folks, needs to be our own best cheerleader. Why? Because we can't wait and we can't hope that someone else will come along to just simply cheer us up. We have to rely upon ourselves. You know, there's an old cowboy saying out there that says, fall off a horse 7 times and you're a real cowboy. You know, I say if you fall off your horse, get back up. If you fall off track, get back on track. It may be hard, it may be frightening, but getting back up on that horse is what you need to do, and then you need to cheer yourself to victory. That's how we bounce back with self-encouragement. Now let's go take a look at the markets here. Let's see what kind of encouragement we've got out here right now. Dow futures off 39 points, trade out at 15,459. S&P down 4.5 points, 4 3/4 points, trading at 1682. NASDAQ futures off 7, trading at 3,063. King dollar up 4 ticks right now at 81.80. Not a lot of movement here in the currency market. Gold is up $5, trading at $13.26. Silver up 6 pennies at $19.84. Light sweet crude up 30 cents at $1.05. Even Steven out here. Let's take a quick peek around the globe, see what we have going on out here. You've got over in Asia last night, just a bloodbath over in Japan, over at the Nikkei, down 3 3/10% off 468 points. The Shanghai down 1 7/10% off 36, and the Hang Seng off 0.5%. That was off 118. Over in Europe right now, the FTSE's up 13 points. The DAX is up 14, so not any real big movement up there. I suppose it's up to you and I. It's up to the United States to go ahead and set the trend for the rest of the day. Our call-in number is 877 927-6648. Give us a call. We can go take a look at your stock chart, most certainly. Get an idea for what it may be doing. Out with earnings here before the bell this morning. You've got Hertz Global Holdings. They're trading down about 3% right now. That's off 79 cents. Lowe's Corp out with numbers up almost 6%, up $2.65. You've got Sohu.com, SOHU. They're down 4.5%. That's off $3 and change. Simon Property Group off less than 0.5%. No big deal. They're down 69 pennies. Tenneco, TEN. That is off to the races. That's been off to the races. That's up 2.5%. That's up $1.16 right now. Wynn Resorts off about just under 1%, down $1.14. Out with numbers here after the bell today. We're going to have Anadarko Petroleum, Caesar Entertainment, Express Scripts, SourceFire, Greenlight Capital, Herbalife, Luminex Corp, Nutrisystems, Masco, Bankrate, Vertex Pharmaceuticals, just to name a few. Let's start off by taking a look at the futures market. Now, here's the one chart that I think we really need to be paying attention to. And that is this one. That is the NASDAQ futures. It's been trading in a 30-point consolidation range. We'll say it really began, you could say it really began on that decline bar here, coming in at about July 18th. So we're going all the way back, 10 days, 11 calendar days out here, right around 5 o'clock in the afternoon. I believe that would have been the Google numbers out there. And really, it's been in a sideways, about a 30-point sideways consolidation range. The top of that consolidation, by the way, was $30 and we'll call it 30.60. Right around 30.60 is the high. Now, you're trading at 30.63 right now. The bottom of the consolidation, somewhere right around the 3,030 level. So that's your 30-point consolidation. So what we can see here, let me just kind of just slide this over to the right. We'll just slide it over like that. Make it a little bit easier. If you are watching us on Tiger TV, maybe you're listening in on the radio or your mobile device at TFNN.mobi. Thank you so much for doing that. I'll describe to you what it is that we're looking at. Got this little sideways rectangular box. It's highlighted in yellow, at least on my screen. Remember, you can catch the archive of this show on Channel 9. And what we can see here is that the sideways trading range, this consolidation range, one of the best patterns out there, was broken through at about 2 o'clock in the afternoon on July 26th out there. It's a futures contract that we're taking a look at. That set up a move to the 30.90 level. Now, all that we have seen thus far is a high that came in here at about 7 p.m., 7 p.m. last night. That level was 3,073. So 30.90 is really the number that you should see. You should see a movement equal to or greater than the actual consolidation pattern. So for the Nasdaq to come back and test this area, no big deal there. When you break a consolidation level, oftentimes you're going to see a test of that area and then determine whether or not the move is real. We actually saw that take place here right around the 2 o'clock, 2:30 time frame on Friday out there, and then it broke out above that level. So even if we see a bit of a pullback, the number we want to be paying attention to is 30.60. You're at 30.64 right now, because if we have a touch and go, what that says is we'll see 30.90. We should see 30.90 in the NASDAQ futures. That'll go ahead and actually pull the markets up higher today. Now, on the 30-minute chart, what we can also see is we are neither overbought nor oversold, so we're really at the midpoint here. And so as far as what is the more likely outcome right now, I'd have to go with the mere fact that the NASDAQ futures have broken out of the consolidation level. Another test of that and a hold above that area, that'll give us a pretty decent confirmation that actually the market wants to move higher, at least the NASDAQ futures want to move higher. Now, that's not the same pattern that we have on the other futures contract. The ES Mini, that had completed its consolidation pattern a while back. But, however, there's a new one that is forming here. So the new one forming is about a 16-point consolidation level, and that's really coming off of the about the same time period. We're going to use the July 24th, 10:30 session, right around the 1688 level. That'd be the top of the consolidation. The bottom of the consolidation really was established back here at 5:30 in the morning on July 25th, down at about the 1671 level. We saw the market move down on Friday, in fact, move down into that level at 11 o'clock in the morning. That area held and moved all the way back up to the top of the consolidation. The top of the consolidation, again, is we'll call it 1688. It hit that area on the 28th last night at about 6:30 in the evening. So Where's the best place to sell from? Where's the best place to buy from? Well, in the case of the ES Mini, best case that we'd be selling from would be 1688. If, in fact, that area holds, you're at 1682 right now. The low that you could see, where's the best place to buy from? Well, best place to potentially buy and sell from is really what I should be saying. About the 1672 type range, 1670 to 1672, right around that 11:30 a.m. session here on Friday out there. Now, here's the key. And when your back is up against the wall, and I actually did go ahead and sell the market short last night just for a quick trade. When I'd close that out at 6 o'clock this morning, it's always nice to put a few shekels in your pocket while you are sleeping out here. And if we do take a look here, the ideal thing is not really to step in here now. If, in fact, the price breaks one of these consolidation areas, that's the time where you would go ahead and play a continuation move out there. And that continuation move would be either the upside or the downside. Just simply let the market tell you what it actually wants to do out here. Right now, to be honest with you, I don't have a clue as to what it wants to actually do, at least in taking a look at the ES Mini. Sometimes there are those time periods where you're not sure what the market wants to do. You just want it to go ahead and prove itself to you out there. There was a Gartley sell pattern. That was the one that created really the top of this consolidation range. That had completed here around July 26, right around 12:30 in the evening. That precipitated that move down and held that lows right in that 1671. So that's on the ES Mini. So there's a couple patterns out here that we can be paying attention to. Inside the Dow futures themselves, they're really trading in a descending price channel out here. And that descending price channel, we're using the open of the bar at 8 o'clock in the morning on July 24th. That open is 15,552. The next touch points on this happen to be the close of about 12:30 in the evening on July 26th. So the Dow itself actually a bit weaker, clearly traveling in a descending price channel. That has held even coming in last evening, or early this morning at 3:30. That was the extent of the move as it ran into that price channel out there. So a break of this price channel, because it is descending, that could be a real break out there. Again, what you would expect to see here is a break of the, if the NASDAQ goes ahead and pulls the market higher, you would expect to see a break of the price channel, come back, test it, and then potentially off to the eraser. But I think it's the NASDAQ futures that we really want to be paying attention to give us some guidance out here in the market. But it's nice because we've got these 30-minute charts that are going to give us some help as to what the markets are doing. If we go take a look at some of the other charts that we like to go ahead and pay attention to, well, this most certainly is one of them. It happens to be the 120-minute chart here of the of our favorite currency pair. That is the Euro Japanese yen. That has made a 0.618 retracement off of that butterfly sell pattern, that nice 1.618 butterfly sell pattern. 129.80 is the number right now, trading out at 129.76. Looks like, and that's a 120-minute chart, so we've got a little bit of time here. But if it closes below 129.75, that's actually a continuation pattern to the downside. That actually would put some heat on the stock market here in the U.S. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, a real key thing here is when I go over the charts in the morning, especially during the open there, we're taking a look at 30-minute charts out there. For anybody that is trading off of any information that I'm providing out there, make sure that you stay inside that chart pattern. Make sure that you're not trying to set up a chart, a longer-term chart than anything other than on a 30-minute chart out there. If I'm taking a look at a 10-minute chart, you got to stay inside the actual time frame of those charts out there. So it's really important to be able to stay inside of the chart that you're looking at. Now, you want to take a look at what's going on up one level and down one level as well, just to try to understand different patterns that are out there. But in any event, let's go start by taking a look at some of these equities here that are going to be moving as we come into the bell here. Hertz Global Holdings, HTZ, is the ticker symbol. They're out with numbers. They reported revenues of $5.1 billion versus $4.2. That's our 6-month numbers. They did net income of $121 million versus $92. I must be guiding off a little bit lower. I did see where in Europe they're going to start putting that new Jaguar, that F-type Jaguar, out there for rent. Looks like I haven't actually seen one on the road, just a commercial that they have shown on air. And pretty cool looking 2-seater out there. Would like to see one up close. In any event, the stock is down about $1 right now. That's off 3.5%. 25.90 was the last trade. Now, this made a swing point out here, as did the entire market. So this is certainly following the market here. So if you're going to trade this stock, it would also be good to make sure you get the market right. June 24th, the high of that candle is 23.15. And you're trading well above that 25.90 right now. Volume down there, 8.5 million shares here. On Friday, this got down to a low of $26. That's really what it's trading into at the moment. It's just simply the low of Friday's candle out there, 8.9 million shares. So nothing really, nothing that I see here. We'll have to see what kind of volume you've got coming into this thing. Nothing that looks very abnormal. This did have a little bit of a gap up on July 5th. Of course, that makes sense because of the holiday out there, July 3rd to July 5th. Hasn't been tested. That's 25.46 out there. And volume is 4 million on that. So in this case here, the equity looks pretty good. This is back testing its highs out here, trying to break out above that level. Let's put this on a little longer-term chart out here. Longer term by longer term, let's put a weekly chart on Hertz Global, and that is trading above, well, try to get above the high of July of 2007. 2720 is the number. Volume on that trading session for the week was 5 million shares. As that area was attacked, it was attacked with 22 million shares. So being attacked with volume, no volume off of the highs or anything like that. Stock chart looks pretty decent out here. We'll see how this actually trades today. That is HTZ, Hertz Global. Also out with numbers, we got Lowe's. L is the ticker symbol on Lowe's. That's trading up a nice about 3.5% out here. Let's go see what it is going to attempt to do here. Looks like we've had a little bit of a double top. It's going to try to take that level out. Lowe's right now trading at 47.68. The actual swing point high is 47.10, so trading well above. And that is the May 22nd high out there. It also had this little key reversal session here on July 23rd. The high out there was 46.91, 652,000 shares. So it's going to try to take that out. That would be a nice momentum move out here. It would be setting up a, A to B equals CD. Let's go take a look at the weekly chart, see if we can see maybe a little bit better pattern out here. This is on Lowe's that we are looking at here. So on Lowe's, if it takes it out with volume, meaning takes out 47.10, that would be one heck of an A to B equals CD. Let's try to do the conservative one instead of the large one. The conservative one I would have to say you'd come back to the swing point from January 4th, about 39.92, all the way up to the high of 47.10 on May 24th. The week is what we're taking a look at. And the 1-to-1 on Lowe's would say you'd be looking at about $50.03. So $50.03 to about $52 would be the likely target. Right now, it is trading out. This is Lowe's at 47.68. That's assuming that it can get above that little double top out there, maybe even a triple top, more like a double top from May 24th. That was on Lowe's. Sohu is taking it a little bit in the shorts here this morning. SOHU. Let's quickly see if we can see what this is trading into. It is last trade fired off at 66.92, so that's going to open down about 4%. 66.92 is still above the June 24th, June 25th level out there, so that actually does not look too bad. 877-927-6648. Let's see, gold up about $7 right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 41 points, trading out at 15,517. S&P off 4 at 1687. Composite down 5 at 3607. Russell 2000 off 1.5 points, trading at 1047. Google off $1.15. Apple up $1.72. Microsoft down 6 ticks. Intel off 11. Cisco up 8 pennies. To the upside, in we've got leading the charge is Intuitive Surgical up $16. Baker Michael Corporation BKR up 1068. That's up 36%. Must be some kind of merger buyout or something going on out there. IMS agrees to retain Baker name. Okay, yeah, so that's what's going on there. You got Omnicorp up 7% up at $70. Netflix, I believe they're out with earnings after the bell today. They're trading up $3. We'll take a look at that. Maybe it's Herbalife that's out with numbers. They're trading up $1.82. To the downside, Perigo off $6 out there. That's on some merger news. Sohu, we mentioned that earlier, down 7% now. That's trading down $4.76. Celgene off $1.25. Not a real big deal out there. Under Armour off $1.28. I think they were out with numbers on Friday. General Dynamics off $1.19 out there. Our call number, again, is 877-927-6648. Not a lot of info here other than the NASDAQ futures pushing up a bit higher. And as I said, that did break the consolidation level and suggests a move to 30.90 out there inside the market. So we'll see if that actually comes to fruition, maybe even during the next hour and a half while we are on the air. If it's not during my shows, it might be during Basil's or Larry's or Daryl's or David's or Tom's. Well, not during Tom's because, actually could occur during Tom's show as well. Now, let's take a look at some areas of the markets that are moving. How about the Nikkei over there? The Nikkei here had formed a very nice Gartley sell pattern. Let's go ahead and pull that up on the screen here. Just under a point, 707 was the actual number of the retracement. But it gave you that key reversal session right here. That was on the trading session of July 19th. There were two actual key reversal sessions inside the Nikkei. The first one that didn't hold, which was the July 8th area, it actually held up until about July 17th, July 18th out there, and then ba-boom, on July 19th gave you another bearish engulfing key reversal session out here as it made that higher move. So that was telling you, remember, we're utilizing these retracement numbers, these Fibonacci numbers, expansions, retracements as guideline areas. What you need is you must have the candles. You must be waiting on the candles to give you the actual trigger signals in order to that the move may be over or is over. In this case here, the move is over inside the Nikkei. Take a look at the closed at its session lows here this morning, earlier our time this morning at 13,661. If we take a look, this could be setting up an A to B equals CD down. If we go take a look at that, your A point is going to be that big key reversal session there on May 23rd. That would be your A point. Your B point on this would be June 13th's low, 12,415, and that C point would be July 19th. 1-to-1 A to B equals CD would actually take you into about the 11,421 area. What is on target for sure is 13,385. That's down another 300 points. But the way that this is moving down looks more like quite frankly, a test of that June 13th area for it. That's its swing point, and the high there is 13,050. The low is 12,415 before it really releases the next piece of news to us. Let's go out to Boston to our man Dave. Dave, thanks for calling. Thanks for holding. How are you this morning?
Hey, Stevie. How are you, buddy?
I'm doing great. Still here in the U.S.?
Well, I just got the word. I'm heading out Friday back to the Philippines for hopefully just 2 months.
Okay.
And then we're going to complete the switch in Bulacan, and it should be up and running by early September, and I hope to be back by mid-month, by mid-September.
Well, safe travels to you. Now, are you able to pick us up on the?
No, I basically am cut off from even cell service over there. Steve is very limited.
Yeah,
it's so outdated. The phone systems, we're using Nortel systems, which the company's out of business.
Yes,
but they're still utilizing the old style big phone systems that are the size of phone booths. There's no internet, no VoIP, and that they use. They have internet, but they're not using the new systems yet. So
yeah. Well,
and there's typhoons every other day over there, and the equipment gets flooded out, and everything's outdoors. They're all, and the battery backups they got to have, and they keep getting flooded. So we're there constantly trying to repair the equipment and keep them up and running. It's insane.
And what do you think is the length of time of your travel this time over there?
Well, I hope to be back by mid-September.
Okay.
So that wouldn't be too long, but I'm long GDX, as you know, and my question is, I'm going to probably bail out because I won't be trading. But where do you see this thing going in the short term? I mean, probably by the end of the week. I know we got a lot of Fed action this week, and what do you see happening with gold and GDX in the short term?
It's a great question. So I think that instead of actually taking a look at the GDX, the way that I would answer your question this time here, what I would be looking for is maybe some correlations. And the correlation there would be, what's going to go on maybe with gold and what's going on with the U.S. dollar index. So to the extent, are you one that has the belief that the strong dollar will still go ahead and have gold pull back, or when you are you looking at any correlations yourself? Is really the question I should ask.
You know what? What I've seen lately, Steve, even bad earnings, bad economic data, what's moving this market is the Fed. It just seems. I mean, we can have the dollar go up, the market go up, bonds go up. It's the correlations have not been what they normally are. Everything is predicated on the Fed and interest rates, it seems to me lately.
Well, let's do this. Let's take a look because you're really asking more of a short-term standpoint.
Right.
So let's try to dissect it like this. First thing I'm going to take a look at is the euro-U.S. dollar currency pair, and the euro-U.S. dollar currency pair has made the 0.786 retracement, coming off of a really big move down, which was really taken from the swing point high of June 18th at 1.341 all the way down to the low that came in on July 9th, and it made a heck of a retracement. Now it was already communicating that it was going to be a heck of a retracement because of that wide-ranging bar as it came off the bottom on July 10th. So for it to get to the 0.786 area was something that could be easily seen out here. Now, the problem was on July 25th, that was on Thursday, it was coming into that 0.786 area with a wide-ranging bar. Today, and then on Friday, it was a little doji. So that piece of it's good. If the euro can get below somewhere maybe around 132.34 out there, you would see a reversal pattern. The lower the better, quite frankly. If this, in fact, were to close down below 1.3276, that would tell you that you're going to start to see a reversal inside the euro. Now, what that would mean, Dave, is we would see the U.S. dollar index get stronger against the euro. So we're going to actually we're going to overlay a chart of the U.S. dollar index on gold to determine whether or not it's correlating right now. Because if it is correlating right now, that would say that if this were to turn, then you would see gold turn, and that'll have a direct impact on the GDX. Okay, right. So we want to understand those correlations. Now, the other side of this is that because of coming into that 0.786 area with a wide-ranging bar, we cannot rule out that the euro would want to go up to to go test the highs back here on June 19th, which is at the 1.34 level. That would go ahead and say that the U.S. dollar index would get weaker, and therefore, if that correlation exists, you can expect the GDX through the end of the week or through the time period that the euro would move up there to actually go higher. Now, the problem here is obviously the currency pair is trading around the clock and the GDX is not. But at least it would help you from a directional standpoint. Right. So I want to lay that out there first as to what we would use as a version of our premise. Now, what I'm going to do, and I'll just do it on this chart right here. Let me just go ahead and pull up the continuous contract for gold. And so we'll overlay that out here. We'll put this on the chart. Oh, it looks like I've got the correlations maybe already out here at the moment. There's a black line and a red line. That's got to mean something. Okay, so the black line is the U.S. dollar index inverted. That way, that means that if the U.S. dollar index is getting weaker, it's moving up, and you would expect to see gold moving up. So that's the black line that we want to pay attention to. The red line is actually the GDX itself. How about that? Yeah, I must be having a good day. That's pretty lucky to pull up the chart, and it's already on there. I'm living right. Okay, so
there you go.
Now
you're right on it.
Yep. So this is good because this is actually what we really wanted to take a look at. And so what we can see here, Dave, is that so far we'll say with gold coming off the bottom, and I'll start from the July 9th area, you can see that the U.S. dollar index has gotten weaker, and we can see that it really is correlating very well with regard to gold. Now, the U.S. dollar index got a bit weaker here from, let's say, July 24 through today, and we've only seen gold move sideways. But for the most part, I would say that the correlation in the shorter term right now seems to be on.
Right.
And taking a look at this. And the red line here is the GDX. And you can see the same thing here with the GDX, how it's correlating with gold, it's correlating with the U.S. dollar index. So the real key to answer your question is going to be to pay attention to that Euro chart, in my opinion. If you start to see, so I'll just simply go back there. To me, that's how I would answer your question with regard to what might go on through Friday. In fact, what I'll do here is I'm going to switch down to the 30-minute chart for the euro. And let's get an idea as to, I think it's a 30-minute chart, let's get an idea as to whether it's overbought, oversold, what it might be doing. So right now, the euro, U.S. dollar, we're taking a look at a 30-minute chart on it, and it's been pulling back. It's going to deal with the 200-period exponential moving average, which is just slightly lower, right around 1.3239. But what we can see on the lower portion of the chart, that relative strength index, it's down towards the bottom. It's at 31.35. When I say the bottom, the area where it starts to get into that oversold condition. So right from here, soon from here, doesn't mean at 9:46. It just means that sometime here shortly, we should actually see a bounce in the euro, meaning that it would move higher. So if that's the case and the correlation exists, that says that the GDX ought to trade a bit higher today, and then you just have to go ahead and place stops, or just try to. So to me, because the correlations exist, this is where to make a shorter term decision and give you thoughts on it. That's how I would trade it. That's what I would be looking at.
Yeah, that makes a lot of sense because they have been moving in tandem with the dollar and the euro.
Yeah, there's times where they certainly come apart. Where they don't correlate, like you were saying.
I really appreciate it, man, and I can't wait to get back, and we'll have to definitely. I'll be hooking back up. But
no problem.
If you get a little time, the uranium stocks have been going out of control, and just take a look at UURE, and I'll listen in if you get a chance later on, because that thing has been exploding for some reason. The uranium stocks have really been moving.
Okay.
All right, Steve, listen,
I'll do that.
Thanks so much. I really appreciate it. I'll be talking to you.
Okay, that sounds great. Safe travels. We'll look forward to seeing you in September.
Thank you so much.
All righty, take care. All right, that was Dave in Boston. Let's all send him some nice white light while he travels over into the Philippines and helps folks out there, and that's a beautiful thing. And so let's go back here, and really, so he asked a great question with regard to the GDX, and and he was taking a look at the short term aspect, and so there are times where you want to, in my opinion, where you want to at least pay attention to correlations. And when you are trading a vehicle, you certainly want to pay attention to the actual vehicle that you are trading, and it was the GDX that he was asking about. So I probably should at least go back and take a look at the GDX specifically, just so we can see how that would trade. Because what we'll do here, even on the GDX, which right now is at 27.40, let's just take a look at a shorter-term time frame on this. Let's see if there's any patterns inside the GDX that are worth noting here. Let me just go ahead and update this stock chart here. So on the 30-minute time frame, we just got to wait for this thing to update. Anyways, while this is updating here, right now the Dow is off 12.5. S&P is down 95 cents, so it is flat. And we'll go back and we'll take a look at those intraday charts out here. But I'm not seeing anything significant here on the GDX that says to me that it's falling apart. It looks like it'll go and test the swing point high from the close of July 23rd. And if it's coming in there with more than 6 million shares, Dave, that's another good sign out there. And that high is 28.30, and it gets a 30-minute chart. So I'd look at a couple different intraday charts since you're trying to time something, for Friday out there. So that was on the GDX. Let's actually go over, and so I want to go to the 30-minute charts, and then we'll go take a look at that UURE when we come back from this first breakout here. We can see the Dow futures right now up against the descending price channel out here. We can see that the NASDAQ futures hitting a high so far of 30.78. So that sideways consolidation move out here of 30.90, I think this is the one that we're going to really pay attention to because when it does get to 30.90, with the NASDAQ futures being the leader out here, that may be where we see a reversal start from. Now, that'll take you back to the swing point high at 11 o'clock in the morning on July 18th. That level was 30.87. So it looks like that's where the NASDAQ futures are headed to. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 25 points right now. S&P off about 3. Composite up 1 point. And Uranium Resources, Inc., URRE, Dave mentioned to us, is the ticker symbol out here, traveling out right now at 5:15. And he is right. This thing has been a little rocket ship out here. Now, if we take a look at this, if you're watching us on Tiger TV, you're seeing a number of squiggly lines on my chart out here. In fact, I got all kinds of stuff out here. Let me get rid of all this stuff and start it back over. Delete all. There you go. And what I'm going to do here is one of the things that I noticed on the stock chart is that it's now up and above that 200-day exponential moving average. The last time that price was above this area takes you back to April 11th, 2011. Otherwise, that area has held as a area of resistance. It was first hit back on May 27th, 2011. It moved down. The price moved down, moved back up, and tagged that level on October 20th, 2011. That held as a resistance area. Again, February 17th, held as a resistance area. February 17th, by the way, of 2012. And then, once again, on January of 2013, January 9th, 10th area, when it hit that level. Now, what it did was it came crushing through there with some massive volume on July 26th. So how would you trade this now? The way I trade this now is wait to see if it will come back and test that 200-period exponential moving average. So that's an area that has been resistance. Old resistance will become what? Become new support out here. Right now, what it wants to at least do is take on the swing point high from January 10th out there at 599. It's at 520 right now. I wouldn't jump in on this trader. The reward to risk is just not there. But if this thing can pull back into the breakout area, now where this thing really did break out from, I don't know that it'll get back there, would be the July 19th candle. That's about $2.46 out there. So that is on URRE, Uranium Resources, Inc. out there. So that maybe you want to just kind of keep that on your list and keep checking back in on that one. We talked about gold earlier, taking a look at the GDX. If we peek in on gold itself here right now, really not doing much, just traveling sideways. A couple small-bodied candles. On Friday, we had a little doji. Today, a very small-bodied candle. Just says that it's a bit tired here, and maybe that correlates to what we're seeing inside the euro-US dollar. But again, if we do see the euro start to back off here, we want to be paying attention to gold and see how it behaves. We want to see if that correlation is out there with a stronger dollar and a weaker commodity with a weaker price in gold out here. So we just want to measure that strength and see how much that correlation exists. A quick peek in on high host silver out here. Silver trading out at $19.88. It's really been having small-bodied candles ever since it broke through the candle session from June 26. It broke through that on July 22nd. But now just traveling with inside the body of this candle, which is, quite frankly, a bullish signal because any close above $20.57, and that's a continuation move higher. Of course, that continuation move would take you up into about the $22 level. But silver also looking just a bit tired here, trying to recharge its batteries. Light sweet crude, on the other hand, pulling back a bit after completing an A to B equals C to up. Let me go back and take a look at this just off of the current contract that it is in. And it looks like light sweet crude hopefully pulls back to about the $100 mark. That's a dead cat bounce. That's nothing. Pulling back to $100. It's at 104.33. Folks, if you're off to start your Monday, have a fantastic day today. I'll be up next with the Money Masters Show. And always remember, you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance. Cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Look forward to seeing you soon. Take care.
That makes people come up, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.